So let me show you an example of that. Hi guys, welcome to this quick tutorial. I'm going to show you how to use risk management. Now you may be thinking, is it going to be random? But no guys, because the whole idea about trading is to minimize your losses. That's an important thing. So we're on USD CAD here. For argument's sake, what we're going to do is say that let's put a horizontal line, we was here. Where this blue line is, we was here and we was looking to take a trade. So if the market was at 1.2880, if we look and analyze the chart, we can see that there is a strong support level at 1.2860. So we can see there's a very strong support level at 1.2860. Reason why is because these wicks tried to break this support level, tried to get past it, but it was completely rejected. The bears were completely rejected and the bulls took in place as soon as it hit the support level. So we know we have a support level right there. So let's just put another line in there. And just to make it less confusing, we'll put it as a dotted dash. Let's color it blue. Cool. So that's our support level and that's where we are at the moment. So how would we analyze this trade and how would we manage our risk? So basically guys, so if we were looking to go long, so if we were looking to buy here, what we would do is look at this support level and think, okay, this looks like a pretty strong support level. And it's very likely that the price will bounce back off this support level if the price reaches this level again. So our stop loss should be set outside of the support range. Now a safe practice would be to place the stop loss about 10 or 20 pips away from the support or resistance to allow the price to work with. So in this example, our support level is at 1.2860. So if we was to put our stop loss, we would want to put a stop loss at 1.2840. So this is where we would put our stop loss at 1.2. So we put our stop loss at 1.2840. About 20 pips away from the known support and 40 pips away from our entry point. Now, we advise guys to use a risk reward ratio of 1 to 2. So what does that mean, guys? We have the potential risk of losing 20, 40 pips. Yeah, so because we are risking 40 pips, we want to at least get a reward of how many with a 1 to 2 reward ratio? We want to look to get at least 80 pips with this trade. So with an 80 pip trade, we will be looking at 1.296. So if we hit here, change this to our green. There you go. So if this is at 1.296. There is our take profit, and this is how we manage our trades, guys. So let me just quickly draw a few rectangles so you guys can understand the exact ratios. So if we used to get a rectangle here, so guys, please don't get confused. Just remember, this line here is our entry point at 1.2880. 1.2860, this is our strong support. 1.2840 is our stop loss. And 1.2960 is our take profit. So let me explain why this is a very good risk managed trade. So let me just draw a rectangle here. As you can see, so our rectangle, just bring it down a bit more. Excellent. Let me just change the color to red. Cool. So here, as you can see, guys, from our entry point, we are risking only 40 pips. Now, all I've got to do is copy and paste this rectangle. If I do it again, it will fit perfectly with our take profit level. Just like that. Reason why, guys? Because we're using a risk reward ratio of 1 to 2. So let me just change these colors to green, make it look nice. Excellent. So clearly here, as you can see, guys, this is a well risked managed trade. It's not random, guys. The whole point of trading is to minimize your losses, and this is how we use risk management. So what I suggest is always use about a 1 to 2, at least a 1 to 2 risk reward ratio. And why is this a 1 to 2? Because we're risking 40 pips, but the reward is 80 pips. That is how we would work. And as we did with our stop loss, guys, we have to make sure that there is no known resistance before our target where the price could reverse before we take profit, guys. So even though I did say 1.2960 as a take profit, we can see here that there was previous resistance here before. So because there was a previous resistance here, guys, the price could reverse before we take our profit. So what we should do really, because our previous high lets us set up that resistance level, our take profit should be at least 10 to 20 pips away from this level. So our target previously fixed with our risk reward ratio, and it still matches the requirement, guys. It's still a 1 to 2 risk reward ratio. So you can see our resistance was at 1.2960. If we take it about 10 pips down, we would really be doing a take profit at 1.295. So just under that 1.2960, because ideally, again, because of risk management, guys, we just want to have it at least 10 to 20 pips away from that resistance line. So that's it basically, guys, a risked managed trade. Remember, use 1 to 2 risk reward ratio. You want your stop loss to be about 20 pips away from the last known support area or resistance, whatever you're doing if you're selling as well. Then you want your take profit to be about 10 to 20 pips less. Then like you said, guys, we're risking 40 pips. We're looking to gain about 80 pips.